Many of you may be wondering what all this talk about tariffs and a fall in stock market means for you and your pensions investments. Some are even questioning if the current situation qualifies as a stock market crash. So here is some useful information to help you make informed decisions. The losses we're seeing at the moment are the biggest we've seen since COVID in early 2020. However, the word crash is usually reserved for drops of more than 20%. For example, in 1987, also known as Black Monday, when the US stock market lost 23% of its value. By comparison, since its peak in February, the US stock markets have lost around 17% this year. The UK FTSE index has fallen sharply too, but not by too much. This month, an 11% drop. So, in this relatively volatile scenario, while the world waits to see how stock markets react to reciprocal tariffs, investors often move to what we call safe haven assets. Bonds should typically be seen as safe haven assets. Now, what does that mean for you? You'll have heard your advisor talk about diversification. This means your money will be invested in more than one pot, some in equities and some in bonds. So while your portfolio is likely to drop in value in the short term, the bonds will cushion that blow. Also, remember, knee-jerk reactions to market changes are rarely good moves. In 2020, after we saw some hefty drops in global markets, shortly after we saw some fantastic recovery. You don't want to have moved your money and then missed those increases. So what should you do? Absolutely nothing. Composure and patience are key. If your circumstances haven't changed, hold steady. Your advisor can help you understand the turbulence and how it's going to affect your particular portfolio. But remember, as this image shows, markets fluctuate in the short term, but always recover in the long term. You can see this investor started with £1,000 in December 1994. By the year 2000, that 1,000 pot had grown to more than £3,000, but in 2001, when the Twin Towers were attacked, it dropped right back down. Now, in 2025, that £1,000 has grown to around £10,000. If you'd like to view this chart in more detail, it's in the comments below. Your focus should be on your long-term goals. Now is not the time to deviate from the plan.